The silver price has had a huge dip from roughly $55 back under $50. Oh no, everyone is freaking out. Look, don't panic. And here is why. Let's look at the charts with me, Joe Main. You're watching Good Morning Stackers. Hit the big red subscribe button to join us. Here is silver on the daily time frame priced in USD. We are talking $48.50 US cents. Let's quickly look at how we got to this dip. Did we notice anything, along the way that said it might have a little bit of a dip? And then we're going to zoom out and I'll tell you why you shouldn't panic whatsoever. Okay, let's pop onto the 4 hour very quickly, do the quick weather report. The reason why we've had a dip is because we had a loss of momentum, at least on the 4 hour time frame. This is the very low time frame stuff, and this is number one why you shouldn't panic at all. But let's just see how we got there. On the 4 hour, what you can see, and I'm using the relative strength index as an indicator. Okay, it's one of the main ones I use. You've got a higher high in price. So this is where we had that spike up to and a quick move back down up to that $53.50 mark, back down to that $50 mark. Of course, we broke the all-time high of $50 just recently. We had that move up to $54.60. Okay. So that was a higher high. However, if you were watching the relative strength index, a very important indicator, you would have noticed that we had a lower high on the relative strength index. So that's saying that something is diverging, okay? Higher high in price, lower high in the momentum indicator. And it's saying, well, momentum is, the steam is running out, okay? And again, this is just on the 4 hour time frame. We're not talking dailies and weeklies and monthlies, okay? We'll zoom out to those in a second. So yeah, pretty normal. Again, look where the price had come from. I mean, all the way back, this was the last kind of major kind of dip here, like the $40 mark, maybe even here. Look at this number going up. What goes up must come down. We were expecting dips, okay? And this is just where it happened to do it at, okay? Higher high, lower high, and now bearish divergence is playing out. The question now becomes, has it played out fully? Don't know. No one has a crystal ball. I will say, though, that what's good to see, actually, is that's a really quick dip, okay? It's pretty quickly reset the RSI on the 4 hour time frame. So on the 4 hour, you've already gone back into extremely oversold. You can spend a little bit of time there. Okay, so I'm not saying the dip is completely done. But look here, it's you get into those very oversold areas, and then eventually you just tick back up again. Okay, on the 1 hour time frame, let's have a look. You've got some potential bullish divergence. So you actually have potentially in the next 24 hours, maybe 12 hours, something like that, you could see a little bit of a rise back up again. Why? Well, now you've got a lower low, but a higher low on the relative strength index. Okay, so that's some actually bullish divergence now. So instead of higher high, lower high, now you've got lower low, higher low. So I'm actually expecting within the next 24 hours that you can come back to test an area. Now, this is just interesting weather report stuff. This isn't for the investors, okay? You're buying for the longer term, but just for traders in case. Like, you can come back anywhere up to, this general area here. You could come up to that, back up to that sort of $50 area, and that wouldn't be surprising. That's a normal kind of retrace. So just watch out for that, okay? What you want to do to see it get onwards and upwards from here is you need to see it clear back through $51.80, okay? So for those who are hoping that the price just heads straight back up from here, what you want to see through $51.80 roughly, and that would signal really good strength, okay? From that high and that low, you're getting through the expected resistance range. If it just sails through, that's fantastic. But expect some kind of resistance up in this general area here, okay? So we're not out of the woods just yet. You could see a little bit of a further dip. Let's see. I want to show you the macro now. Okay, so I just want to show you the big zoom out, why you shouldn't be worrying as a silver investor rather than a silver trader, because as a trader, you're looking to make short-term profits, get in, get out, etc. No, don't worry about that as a silver investor. Let me show you the big zoom out, and then we'll go into the midterm. We'll look at where we could potentially see what's my maximum low price that I think we could get down to. But let me just show you the big zoom out. Really got to look at this. This is the quarterly time frame. My subscribers have seen this many times before, but if you're new to this, this is silver on the logarithmic scale. Okay, so on the side here, you'll see how the numbers aren't exactly going up in lockstep. Okay, it's a logarithmic scale. It's measuring percentage gain rather than nominal gain. Okay, so that's your nominal right there, your linear scale. Those are equal distant numbers from each other, but when you put it on logarithmic, it's measuring the percentage. And 45 years, okay, you've seen it. 1980, 50 US dollars in 1980 dollars. Okay, 2011, 50 US dollars in 2011 dollars, which is around about $70 in today's money. Okay, 1980, $50 back in 1980 is around about $200 in today's money. Okay, what is this telling you, right? And now we've just broken it for the first time. This is 45 years in the making. Are you telling me that after 45 years, breaking finally new all-time highs, that's it? Look, just even use the what? Really? As simple as that. Really? No, of course not. It is not going to just tank from here. It's 45 years, okay? Triple tops usually aren't a thing. Double tops can be a thing, okay? I got caught out here. I was in the excess phase. And what I mean by the excess phase is markets go through three main cycles, okay? Accumulation, then a dip, a public participation, then a dip, then an excess phase where every man and his dog is trying to get into that particular asset, okay? I didn't know about this back then. I wasn't learned. I was a new investor in anything, okay? I got into silver back here in 2010, roughly at the tail end of the excess phase. I thought we're going to sail through. No, double top. I wasn't looking at indicators and all that stuff. So I wrote a lot of this down, okay? But this time, we are nowhere near an excess phase, okay? Where are we in the market phase? Let's just talk about that. Well, you've had that massive reset of the bear market there. Now that's the new accumulation phase, just like this. Accumulation, dip. Accumulation, dip. Public participation. We are just in the beginning of the public participation phase of this next move. So there will be another dip coming. Okay, that will happen. I don't think this is the major dip happening yet. Okay, that's got a little bit to go before we have a larger dip. And then you've got the excess phase to go. The excess phase, now ignore the prices that I'm doing right now, but look, again, accumulation, dip. Public participation, ignore the price where I'm taking it, ignore the time frame, okay? Dip, and then a major excess phase as well. This is why I think, and I absolutely believe, and I think you do too, silver is going to triple digits in the coming 5 years, I would say at least. Again, ignore the time frame, ignore the patterns, all that. We're going into triple digit silver for sure, and we're at what? $48 now. So at least a doubling from here, and I think in the higher, like mid to higher triple digits as well over the longer term. So that's the zoom out. Don't stress about this, okay? But if you want some other reassurance, then you have what is called the cup and handle formation, as many of you know. Major cup, that's your cup, that's your handle of the cup. And what doesn't happen is it doesn't just and then it's over. No, you've got a long way to go. The cup and handle formation generally breaks out to the upside, and then if it plays out fully, and this is why I think, and as I've said, $700 US silver in a long period of time from now, 10 to 20 years from now, is completely doable. Why? Because the cup and handle formation, if it plays out fully, you take the bottom of the cup to the top of the cup, and then you take it to the breakout right here, and then that's your measured move, okay? And I'm not saying 100% it's going to do it, but that's your measured move. Look at that. That takes it all the way up to $700 US silver much, much later on down the track. Number will go up, number will go down over time. But yeah, that's just a normal move, okay? We are nowhere near done for silver. That we've just, peaked out of this little level right here. We just broke out of it. You think we're going to head all the way back down? Not any chance in, I would give it a 0.001% chance, unless if there's some kind of black swan event that nobody can see coming. No, silver's going to much, much higher from here. So let's go back down. I'll get rid of a lot of this for you. We'll go back down into the a little bit more micro. Okay, we'll talk about where we can potentially have a sort of a maximum dip to. Okay, actually, I'll keep it on the quarterly time frame, because what you need to see, and if you remember, we've been speaking about, we made a big milestone in silver just recently. I've talked about it before. It is the quarterly time frame close. Okay, let me go back. 1980, we had that move to 50 US dollars. But where did we close on the quarterly time frame? That's the close there at $38, or a little bit under $38, $37.60, $37.70. Technically, that's 37, the close, not the close, the open, sorry. The close. Yes, we never closed above it. That was a close down here. But here we had the open at $38. Then 2011, okay, we had that spike to $50, but we've never closed that level right there. See that at that 38 kind of level, that $38 mark right there, same level as it was in 1980. Cool. We finally did it. The first time in history that we closed any quarterly time frame above that $38 mark. Okay, that's a very, very significant level. That's the level I think we could maximally get down to, and I don't even think we could get there. Okay, right about there. Absolute bare, as like I say, bare minimum, absolute maximum that I think we could dip down to, and I don't think necessarily we go down to there, but I just want to show you this zoom out, right? How far down is that from here? Okay, let's take a look. If you didn't sell, if you bought in here, let's just say you bought here today at $48.50. Okay, are you telling me you're buying silver and you can't handle a 20% move down? If you're holding for the long term and you can't handle a 20% move, you need to get out of the silver investing game right now, because number goes up, number goes down. Don't sweat a 20% move, completely normal. And I don't even think it actually necessarily gets down to there. I'll keep it there just in case, $38, maybe. It's actually very, very normal once again, because accumulation, public participation, accumulation, dip, public, even if this was the top of the public participation phase, which I don't think it is, you would have a dip, but that's a really normal dip. That's a wave 1, wave 2, wave 3. I don't think this is the top of the wave 3, but let's say it is. Then you get a wave 4. Okay, that can take you out to, a number of months. It could be a while, but are you telling me you're buying silver to make money really, really quickly? No, you're buying it for the longer term. So even if we did this worst case scenario, that this is the top of the wave 3, then we have a protracted for, 3-6 months, that's taking it into like July of next year. So that could be more than 6 months from now. That could be like 6 to 9 months of a retracted price. Is that going to bother you when you're holding it for a really long time? Okay, no, when you know, as I do, that we're going to triple digit silver. No, it doesn't matter at all. And that's just the worst case scenario. I don't think we get down to there. If we do, that's no reason to panic anyway. 20%, that's nothing over the longer term. Cool. But then now, so that's the worst case scenario. Let's take a look at where I more likely think we can have a bit of a dip down to. I'll get rid of that and that. Let's pop into the weekly. Okay, so here's the weekly time frame. What goes up must come down. That's fine. So let's take a look. Let's see. I'll take it from, actually, let me be even a bit more conservative. No, actually, I'll take it from here. This is on the weekly time frame. I'll take it from this recent low. That's back at when we were at $28. Okay, this is a huge move. What goes up must come down. Let's have a look at this. Okay, what's more likely? I think the more likely maximum area is somewhere between here, and I don't think we get down to the bottom end of it. Okay, so this is the weekly time frame, and you've got the expected resistance, the expected support zone. This is on the logarithmic scale. We'll also take a look at it on the linear scale as well. Cool. So you have these expected areas of support. Now, right here, we've spoken about this before. This is your normal range that you could get down to, and you actually wouldn't be freaking out. So that's anywhere between about $42.50, anywhere down into, that's actually below the $38 mark. That's at that $36.50 mark. Even if we got, and I'm not saying we're doing this, even if we got down to $36.50, that's still really normal, okay? I don't even think we get there. I think the lowest we can do is somewhere down into that $42.50 to $39.30 area. I think the top end of the top half of this expected support range, the zag zone, is the maximum that we would get down to, okay? And that's the maximum too. So the other thing you need to look at is this area right here. That's at around about $46.70. That's the very strong support level, okay? So this is strong support, neutral support, weak support. I don't think we get into there. And that's very strong support. So really, I think it's kind of in here. So anywhere down to that, I think for me, around about $43, about $43 for me is the maximum that we will dip down to in this larger dip. That's me personally. Again, you do you. You might have a lower target. The perfect thing is you might be dollar cost averaging as the price is going down. That really would be the best way to do it. If you've bought up here, if you're a first-time buyer of silver and you're freaking out because you bought here at $52, $53, $54, don't worry. As the price is going down, if you are confident, as I am, that we are going to find a bottom somewhere, and then we're going to break this now all-time high, and we're going to get into triple-digit silver. So what do? You just buy every paycheck. You pick a point once a month, you just buy, and as the price is going down, your average cost is getting lower and lower. There is no reason to sell out of your silver to try and time it perfectly. You never will. You'll never buy the perfect dip. Don't stress about that. Don't panic. Buy on the regular. Average your cost down if your average cost is really high. For a lot of us, okay, our average buy-in cost is way, way lower. I think my average cost was somewhere down in the high 20s, early 30s, something like that. So am I sweating a move back down into this general area here, maybe lowest at that 38 kind of level? Not at all. I'm in it for the longer term. So that's my opinion. Okay, maximum $38. Back to that quarterly time frame thing. I wouldn't be freaking out at all. Even if for some reason, if you do dip lower than that, I wouldn't even be freaking out anywhere down to like $30. That's complete. Look, that's an area of major resistance. What, you break out, test as support, and then onwards and upwards. That's completely fine. We know where it's going in the longer term. So the short answer is the short answer of the long version I just did. Don't panic. Okay, we know where we're going in the longer term. And if you want an even more convincing argument for where we're going in the longer term for silver, and in particular, like the whole commodities market as well, gold, platinum, etc. I'm going to highly recommend a video that actually just came out this morning from Mastering the Markets, or David Bird, who is the head of Mastering the Markets. As you know, I am doing the Mastering the Markets 12-month course. Okay, head over to Mastering the Markets, masteringthemarkets.com. You can do their 10-week foundational course, the year-long comprehensive course, which I'm doing. And the head of Mastering the Markets is David Bird. He has had his own channel for a long time called ASX Trader. Right there, he did a video which actually it's about an hour long. Highly recommend. If I haven't convinced you not to sell, if I haven't convinced you to not sell out of your silver position and hold for the longer term, don't panic. This one will absolutely convince you as well. So use me, use David Bird right here. I'll put a link to that video somewhere. It's entitled, I Predicted This Precious Metals Run. Is the cycle over? The short answer is no, but he goes into massive detail as to why. Amazing video, and I agree with absolutely everything that he has said there. And of course, if you want to buy precious metals and you're looking to continue to dollar cost average into precious metals, physical precious metals, highly recommend you buy from Perth Bullion Exchange, perthbullion.com.au. They're the best bullion dealer in all of Australia, I believe. I would know because I've worked for 3 major gold and silver bullion dealers. I worked for Goldstackers, Bullion Now, Ainslie Bullion, worked for all of the big boys over the last 12, 13 years. I think these guys are doing it the best. Why? They have free shipping. No other bullion dealer does free shipping. Have 20 or more items in your shopping cart, you get free shipping Australia-wide. Sign-on delivery, express delivery, fully insured, all that good stuff. But you don't pay for it because you deserve some free shipping when you buy over a certain amount. Again, 20 or more items, mix and match in your shopping cart, perthbullion.com.au. And can I ask you, please, if you are a silver investor, you really want to be part of my private Silver Investor Club. I'll put a link somewhere below. It's a private club for new and veteran silver investors. Now, that's whether you're investing in physical precious metals or you're investing in silver-related stocks, mining stocks, etc. We talk about all that stuff. Anything related to silver, this is the place to be. You get a like-minded community, number one, a lively community of like-minded silver investors. That's number one. You also get exclusive deals on silver bullion. Okay. Let me save that. You get exclusive deals on silver bullion. Okay. There's silver giveaways. There's random mystery auctions, which we're going to start doing. Regular price analysis of silver and silver related assets. Tips and tricks to invest in silver the right way. Okay. Weekly live stream hangouts for the private club. Okay. And anything else that we come up with. Okay. Highly recommend you join. 216 members. It is currently free to join. I will start charging eventually, but join for free. I will prove the value to you. Everyone's getting a lot of amazing value there at the Silver Investor Club. It is the place to be for silver investors. Head over there right now. Okay, ladies and gentlemen, hopefully I have staved off your panic from this very small blip along the way, this little silver dip back under $50. Don't panic whatsoever. We are going onwards and upwards in the longer term. Hit the big red subscribe button to stay updated with me. I go live as well on Tuesdays and on Thursdays and all the other stuff I do in between. Thanks very much for watching. Stay safe, stay informed, keep stacking whatever you're stacking, and I'll see you soon.